Precious Metal Summit 2016 in Zurich. Now it's going into the afternoon, and we have done already a lot of interviews. And also I'm very happy now that we have Aurcana Silver here with Kevin Drover, the CEO of the company. Welcome.
Thank you. Great to be here.
I love that, honestly, because I think it's 3 years ago that I interviewed your predecessor at Aurcana, and some things happened, of course, some bad things we can call it, but now you fixed all the problems, right? Maybe you can elaborate a little bit for our viewers what happened.
Certainly. Yes, Aurcana ran into some problems over the last few years, mainly with debt, debt component of the facility they used to restart the Shafter project. We've since cleaned that up. Orion Mine Finance, we sold one of our mines in Mexico in return of eliminating all of that debt. So now Aurcana is debt-free. It's got some money in the bank. We've recently completed a preliminary economic assessment on the Shafter project and are now looking to finance that and put it back into production.
Fantastic. Okay, then let's dive directly into Shafter. You said you did a PEA for that. What were the metrics there?
Well, we completed the PEA in early September, I believe it was. It's going to be a 6-year mine life with, I think, good upside to extend that. The pre-production capital will be just over $13 million. The timeline to put it in production, it'd be 6 to 7 months, so it's a very quick timeline to production, very low capex to production. The project is fully permitted. There are no permits that are required. The power is turned on. It's literally ready to go.
Fantastic. When you say 13 million, can you do this out of the cash balance, or still do you have to raise some money?
No,
because it's not that much, right?
Yeah, no, we will have to go to the market and raise some portion of at least equity, we hope, and we could certainly do some portion of it as a debt facility, albeit we'd like to do that closer to production so that we don't want to take on debt too soon.
Yeah, okay. What are the reserves already on the project? And of course, where do you see the production profile? So meaning how many ounces do you think you can
Right now, our resources stand at just over 19 million ounces, I believe, of resources that we have. Of that, we would expect to produce just about 11 million ounces of silver from that over the 6-year mine life. The production profile is averaged at about 1.5 million ounces per year, but the first 2-3 years are going to be closer to 2 million ounces, 1.7 to 1.8 million, and a payback period of 1.7 years.
Great. So that means to me you have a recovery rate of around 80-82%, right?
That's correct.
Can you raise that maybe?
There's a good possibility that we could raise that. We have some test work that suggests that. However, one of the things that we would be doing in the pre-production phase of this is some drilling, and we would do some additional metallurgical test work. But I believe we could get higher than that number ultimately.
Great. So what are the next steps then for 2017? As I saw in your presentation, you have quarter by quarter a lot of work to do,
yes,
but finally at the end you will be in production hopefully.
That's correct. Well, the first thing to do, what we're hoping, is to raise the necessary financing here between now and the end of the year or very early thereafter. We would then get to work of rehabilitating the underground so that we could get access to our ore and to our definition drill program that we would want to do. So between the first quarter, second quarter, we would be doing most of that redevelopment work. There's some work to do in the mill where we want to get additional instrumentation there to lower the manpower requirements. And we would expect to be in production late July, early August of 2017.
Super.
Be very fast.
Okay, great. Do you have already an idea about, let's say, the all-in cost or at least the AISC then? So meaning today silver 1860, I think it was just some seconds ago when we checked it. So what might be the margin for you?
Well, as it stands right now with the preliminary economic assessment, the all-in sustaining costs, including pre-production capital and life of mine capital and operating costs, is right around $16.75. We did our preliminary economic assessment at a $20 silver price. And it's very, very leveraged to the price of silver. As the price of silver goes up, the bottom line just gets better and better as we go. At $17, you wouldn't do this project.
That's right.
However, at $20, you're going to make money. At $25, you're going to make a lot of money.
That's always good. Okay, let's assume you are in production, everything works quite well. Where do you see some more potential for, let's say, the mine exploration-wise for the future?
Yeah, we believe that we've got excellent exploration potential. One point here, maybe just to make, is that Goldfields owned this project at one point in time, and they had a resource on this. They, in fact, did a full feasibility study on it, and their reserve on this was closer to 30 to 35 million ounces of silver. Our current resources that we have on it at our cutoff grade is just under 20 million ounces. So that alone, with an increase in silver price, you're going to certainly have an increase in silver production and years of life. But also, the deposit is open along strike. So they just stopped drilling. It's not that they didn't find more, they just stopped drilling. So we would extend out there. To the south of the deposit, we believe there is some very, very good potential. We've got some good intersections down there of gold values, high silver values, along with some very, very good lead and zinc values as well. Yeah. So there's, I think, a good potential to extend mine life.
Fantastic. Well, that sounds great to me. All the best for that. Keep fingers
crossed.
Thank
you very much.
And we want to see you in production then by summer next year.
We certainly want to as well.
Great. Thank you very much. Thank you. Ladies and gentlemen, there was Kevin Drover from Aurcana, the CEO, and you heard it. By summer, they should be in production next year, back with the Schäfter mine, and also some good potential on the exploration. Well, check out the company. Thanks and bye-bye from Zurich.